Welcome back, folks. Just wanted to update everybody on the latest market conditions. I wanted to wait an extra week just to see how close we could come to taking out some of our targets for the major indexes. For those of you just joining us over the weekend, thanks for your patronage and the course purchase. And if this is your first video, please make sure that you check the library and some of our past videos. This video is going to try to cover some earnings, market direction, and maybe a strangle trade. The first thing I want to show you is the Dow. It actually broke through our target of 12,350 on Friday. As you can see, we were right at these levels all week, and then we were looking to take those out, which should get us to our next set of targets. For the S&P, we came up a little bit short. We're looking at 1350, and as you can see, we traded up to a high of 1344 on Friday. It's amazing how close we've come as this market's gone up since October. It's actually been pretty easy to read the charts, and that doesn't really happen all the time. Some people like to use the Elliott wave and the candlesticks and stuff, but we kind of went with feel and momentum to call this market. As you can see, the NASDAQ, it kind of peaked right here. We're looking at 2850. I shouldn't say peaked. We're still hoping for a run to 3,000, but what I'm going to show you, the futures, is a little sketchy this morning, so we might test support before we go back up. As you can see, the NASDAQ closed just under 2850, so we still haven't gotten the confirmation from the NASDAQ and S&P, but really what we want to show you is the moves we made over the last 6 months. We're going to look at a graph for the S&P. Let's see, we'll just do a basic chart. And then we'll go, let's go 5 years back. Well, let's see if we can do 2 real quick. Yeah, I'm going to have to do a 5-year chart. Okay, the move from here is basically when everything started collapsing in the housing market. And as you can see, in 2008, we just went straight down. During this fall, we played a lot of puts on Merrill Lynch, AIG, Lehman Brothers, Fannie and Freddie Mae. And then on the way up, after we bottomed here in 2009, we came straight back up until this range here. And this is going to be May through October right here. So where this circle is from the top here is May, and then this is October. And from here was that trading range, the 5-month trading range we talked about. Back in 2009, we played a lot of these stocks back up, the financials, casino stocks, and you can look at our portfolios and see the difference between playing a trending market straight down and then playing one straight up. And then right here is when we were in this trading range. Now when we got to the bottom here, it was even harder because we didn't know if we would go back down or we would go back up. So as we entered August, the market kind of rallied up through here, and then in September we were almost on the cusp of a breakout, and then that's when we turned bullish because we actually broke through this level here, as you can see. Now our targets are pretty easy to read. As you can see, this is going to be the first big hurdle for the S&P, is this 1400 level, and then right in here is going to be our 1350 level, which I'll try to show you on this chart. see. Well, it's not going to really give it to me on this chart here. Let me try the Dow chart, because they all kind of trade the same, but the Dow can give false signals. So if we look at the Dow chart, as you can see here, let's do interactive. Okay. This is just kind of what we talked about, the drop from 2008 down to here, and then we bottomed and came back up. And as you can see from here, this May range is when we got in that trading range, and then we broke out. So for the Dow, we're looking at 13,000. You can see right here, if I go across this line, this is 13,000, and that's going to be resistance. And then you can see here another resistance level, another resistance level. So that's why we've been calling for the Dow to go to 13,000. And on the way, you can see where we've gotten our targets after the breakout through 12. Here was resistance, here was resistance, and here. And then it made the breakout to challenge these, which is where we've come out with these targets of 12,350 and 12,670, eventually up to 13,000. Now, the reason I'm kind of being a little bearish in my tone, because as I told you, the world events are making the markets a little bit nervous right now. Again, we're down, so this could change. We've got a lot of powerful earnings and economic news coming this week. But I want to show you real quick how you can play the market to the downside, or if we hold support, then you can actually look to get into some call options. If we come down to 12, and hold, then a lot of people are probably going to think we're going to keep going lower. But if the bull run's not over and we're thinking it'll last till April, then it's going to offer our next round of buying opportunity. If not, we'll just play the short side. So real quick, if you want to just trade the indexes, and that's what we always mean by there's always a trade. So you really don't have to trade specific stocks. You can get a read on the market and go long or short. And the best way to do that is playing the indexes. And as you can see, the first symbol we're going to type in is the spiders. And that's just a play on the S&P. So if I can get it to come up here. As you can see, it kind of mirrors the S&P. It closed at 134.53, and you can see where the S&P is at 1,343. So if we go back, here are some of the options you can play, short-term options. We don't like to really day trade that much and try to play some of these swings because of the volatility, but with the shares at 135, some of the near-term put options would be, actually these are February. Let me go to the March. These are actually weekly options, and we will explain those one day, but that's a whole nother video. Here are the March options. As you can see, we've got some that are going to expire on the 19th and some on the 31st. Those are the weekly, and the difference between the weekly and the monthly options. Go back to our trade. If you think the S&P is going to fall a little bit, it's at 134.5ish. You could come down here to let's see, the 133s or the 132s. This is the monthly option, and as you can see, it's at $1.50. So if the S&P continues lower, then there's a good chance that this is going to go higher. On the flip side of that, if you think the S&P will hold 1,300 or 1,325, which we do, then you'll want to look at some of these options as they get cheaper, the call options. We'll be looking at the 135s to see if they get any cheaper. And as you can see, they're bidding about 160, 165. So if the S&P does go down and test support, then these probably would come in around maybe 125. I don't know if they'll get that low, but that's the way they play the S&P. To play the NASDAQs, you would, of course, play the Qs. We've already played the Qs and the S&Ps, and we took some profits before February expiration week just to be safe. But as you can see, we originally think the Qs can trade up to 60, and on Friday they hit 59. Again, it's kind of scary how close we're coming, and with the futures down, but we'll see how it plays out. And then you would do the same thing. You would look for put options. You could do the March or the Februaries, which I said we just don't want to play with because they're shorter term options. But you can see here the 57 puts, they're running about 50 cents. So you could use these as protection. And the other thing I want to show you real quick is how to play the Dow, which would be DIA. And this mirrors, this spider mirrors the Dow. So you could do the same thing, look at your options, and figure out a trade that way. Okay, the other thing we want to talk about is one of our trades for the daily, and it's eBay. We have a June 40 option. I'm sorry, maybe July. Yeah, we have the July option 40. And as you can see, they are about 80 cents. We got in around, recommended the trade around 75 cents. Some people got in at 77, 78. So they're showing a slight profit. And the reason we want to show you this trade is why we came up with it. We did a big write-up in our weekly on eBay, and then when we actually put the trade out, you can look at the trade date and see some more of our comments. But we think eBay can go to 45 or 50, which would make these calls worth $5 or $10. So you could actually maybe 5 times or 10 times your money. But as you can see, we've gotten a breakout from here through here with the stock right here. Now, as you can see, it looks like we're going to get a run to 40, which is going to be resistance, as you can see from this circle and right here. So if we break through 40 and keep going higher, then there's really no resistance up until 45, which will be here and here. And then after that, you can see that there's no resistance until its all-time high back in 2005. So if eBay can get to 45 or 50, again, these options, which have plenty of time for the move to take place, could do really well. They could be at 5 or 10. If you'll notice, eBay hasn't quite made the moves that some of these other stocks have made. And if we just do a year-to-date chart, you can see back in January we were kind of around 30 or a little bit under 30. So eBay still has plenty of room to run. We think their PayPal business is going to be huge. They're signing up 1 million people a day or a month, 1 million accounts a month. So they got the Skype IPO. So we're really excited about this trade, and that's kind of how we think outside the box. Or, like I said, we think eBay can actually hit somewhere up in the upper 40s. So we're pretty bullish on that. That's why we think the momentum's there. Plus, with the mobile business picking up, that's only going to be insane over the next few years. So that's our trade. It's longer term. And the other one I kind of want to show you real quick is Garmin. Okay, Garmin reports on Wednesday, and I'll show you just to double check. You can see here that the earnings are February 23rd. So, Garmin is a stock that we think their business model is fading as other companies have latched onto the navigation technology. But the company also has some, proprietary technology and patents, and there's also a buyout rumor and short interest. So it's hard to say if this stock's going to move as much as we think it is, but the one way we want to show you how to figure out what the market is pricing is we're going to look at a straddle, which is basically the 33 call and put. As you can see here, it's going for about $1.50, and the put is going for a little bit more. So let's just say $1.70. So altogether, these two options would cost you $3.20, which is roughly 10% of the stock. So that is how the market and us, that's how we're thinking the stock's going to move on Wednesday or Thursday. So if you get a 10% move, the stock is either going to be at 36 or 30. And we are going to list a strangle trade in the newsletter on Tuesday, which is basically looking at, I think we've got the 35 calls listed. I'll have to check. Or the 36s, but either way, they're pretty close in price. And then we've got the 30s listed as far as the puts. These are kind of thinly traded, so we'll have to be careful with this trade if we do it. And then again, we might not, but our feeling is Garmin's going to miss earnings and trade lower, but there's also a chance they could be lowered expectations and they say something good. So that's one of the trades we're looking at. That's kind of how we find a strangle or a straddle trade. And then the other thing I want to show you real quick for those of you who are new is earnings. Each week we cover earnings in the weekly wrap, and then we highlight some stuff in bold that our trades we're looking at. So for those of you that are new and want to see when companies are reporting earnings, just type earnings in your search box here. And as you can see, there's a earnings calendar for Yahoo. We also use Earnings Whisper. And as you can see, we've got some companies reporting. And what we do is kind of list them here. And these are some of the ones we're watching on Tuesday, which would be Macy's, Global Crossing, and Hewlett-Packard. And as you can see, those companies were reporting on Tuesday. There's Hewlett-Packard. Home Depot's reporting. So basically, if you look at our weekly wrap, or if you want to do the research on your own, this is how we lay our earnings trades out. Picking earnings trades are an art. We've often said that. For Thursday, we're looking at Safeway, negative. General Motors, that's going to be a big mover on Thursday. As you can see, JCPenney on Friday, which is subject of private buyout talks. Cooper and Tire and Rubber could be a call trade because the price of rubber has been soaring. American Tower is another trade that we are currently in. And our favorite from a few years ago, IMAX. They will be reporting for the first time as a member of the New York Stock Exchange. And basically, what I said, you can take these trades, or you can look at other ones. Some of y'all might want to look at a Stillwater Mining trade, or a Barnes & Noble trade, or Chesapeake Energy. And then you would just come back to your quotes here. Basically, we can just go from here, and then you can start breaking down the trade. How we show you in the manual, you can start looking for support and resistance for HP. You can figure out if they're going to have a good quarter. You can look at the chart here. You can come over here and look at analyst estimates, see if they're going to beat, come in short, come in light. We cover a lot more of this in the manual, but again, I just wanted to give everybody a quick update. I will try to be back within the next week or two, but I think the volatility is going to pick up. Hopefully, the S&P and NASDAQ can break our targets, but it looks like I said, the market's a little jittery open Tuesday. So we'll just have to see how the week plays out. Until next time, I will see you then.